Live. Oh, you know what? I need the code. Did someone turn this off?
You good?
No, not yet.
You gonna be standing with it on me?
No, I'm gonna be. I gotta go off of this.
Tiene que quitarse la bandera. Is the cameras on, Charlie?
Yeah, the camera's on. Yeah.
But when I work on it, I just tap on.
Look how it looks on YouTube.
Yay. Hello everyone, thank you for coming for our first time home buyer seminar. This is the first time we're doing this, so this is great. This is very exciting. And when Anna and I thought about educating the public of first time home buyers, we needed together a team of experts who were great at their field and who could help everybody with their credit issues or the mortgage or lawyers, and of course us. So I was doing my research and like, I need somebody with credit. So I see Gizzy popping up, like this crazy guy popping up everywhere. Wherever I went, it was Gizzy. I'm like, what is this? So I'm doing my little research. I saw him on YouTube. I saw he had like 13,000 followers, and I was like, wow, this guy's big. And so I was talking to Hugo, one of our presenters here, and he mentioned that he fixed his credit. I'm like, what? Oh no, we gotta get this guy here. So I Facebooked him, Messenger, and I asked him, hey, I want to educate the public. Would you be willing to help? He's like, absolutely, of course. And he's here, and I was like, wow, this is great. So
I'm here, and YouTube Live is there too. So make sure you say hello to the YouTube.
Without YouTube. Right now we're at 13,000. Because I'm going with his team now.
That's right. So make sure that, I always like and enjoy putting other people who are actively working, educating people. And that's all I get is other strategic partners who are influential, who are out there making it happen for people. So that's why, thank you for letting me be here. But also you understand that you have 13,000 people who are also...
I'm their fan now.
Yes, correct.
So right now we're at Culture State, which is our brokerage company by Mr. Luis Leiva, and thanking him for allowing us to have this here is great. And we also have Cuban food for the ones who are here, so you guys are missing it. From Yoli's Cuban Cafe, so it's awesome. We have empanadas, croquetas, pernil, we have everything. So, and we also, you guys, look at this. One of you could take this home.
Oh.
See what happens when you guys don't come. So without further ado, allow me to introduce Mr. GizzyCredit.
My people, how are you? GizzyCredit here. People find me on YouTube or social media. I am on social media every day because in this credit repair business, it's all about how many people could see you on a daily basis so you can build trust. So people contact me and they trust that I do the job because they see me every day. I built my business online from my house. I've never had an office and I've been doing this since 2009. I enjoy doing these seminars and educating as many people as I can because this business has a bad reputation. People doing scams, people taking your money, not coming through for you. So I've been told that I'm one of the good guys. Thank you. But in all honesty, it's all about educating the customer to what they want to do with their credit, whether it's to get a car, get a home, get a business loan, get some new credit cards. I enjoy taking people who are down and out with their credit and start building their credit so they could start living life to their maximum potential. Because let's be real, in the United States, it's all about credit. All right, so they don't care what nationality you are. some people out there do, lenders. Make sure that, you know, we don't deal with those type of lenders. But then again, you looked at your credit, all right? So your credit is the most important thing in the United States. Make sure that that is something that you work on, because whether you want to get an apartment or you want to get a low interest rate vehicle, you need to have good credit. So let's get into our presentation. Don't mind me, I'll be sitting down, and this I'll just click. So you guys have this presentation. If many of you don't have it, sorry about that. Hello, Stacy. Hi, Stacy.
Just keep clicking this one, and it'll bring you to the next slide.
Okay. So like I've said right now, credit. Okay, hold on. I love that light. That light is awesome. Yeah. So like I said, credit pertains to everything in all areas of your life right now. That's why I have this picture right there. It's all about for sale, credit, buy a house, mortgage rates, interest rates, credit market, your employment, especially for people out there in DC, DMV area who are trying to get a government clearance, or are right now of police officers who are trying to move up and be detectives. They look at your credit. So, you know, you can't have bad credit even if you are in government jobs. And in order for you to get government jobs, you also need to have some type of credit as well. So credit is everything right now. It's a very popular topic. So we're gonna get into what is credit, what it is, and who can it help, and what's the difference between you know, people actively doing the right things in this service and people doing the wrong things. So credit repair is actually the legal way of fixing any inaccurate information that is on your credit report. Basically, anyone can be helped. People who finish coming out of jail, have no credit, who still have some inaccuracies on their credit report, people who are affluent, who may have a judgment on their credit report, even if they make $10 million a year, need the service. People who want just an apartment or move forward in life, they need the service. So anyone can benefit from credit repair. And what we utilize, the tool that we utilize to fix the inaccuracies on your credit report is the Fair Credit Reporting Act, which was enacted 2007 to establish boundaries for your to establish boundaries between the creditor, someone lending you money, and the credit bureau itself. Okay, so I'm gonna get into it right now. What's the difference between what is a credit sweep and what is credit repair? Now, I know a lot of you online may know or see what is a credit sweep, but a lot of you here may not know what that is. Maybe this is the first time hearing what is a credit sweep. Credit sweep is actually what they call in the industry as doing a police report and putting that everything is fraudulent on your credit report. You thinking that if you put everything fraudulent, that everything is going to be removed from your credit report. Basically, that's not credit repair. Credit repair, again, is removing inaccuracies from your credit report, or whatever is whatever is inaccurate needs to be removed from your credit report. But what happens when you send a police report? When you send a police report, that's what you send, a police report. It's not repairing anything. Maybe you remove all of the negative accounts from one bureau or two bureaus, but there is always one bureau that's still going to have a lot of negative accounts and is going to be held to remove those negatives. I get customers who have done credit sweeps, who are doctors, and they get fooled by, I'll give you results in 30 days with this credit sweep. And when they find out that they get placed in a worse situation than they are right now because they did a credit sweep, they understand that this service is going to be more of a process for them. So basically, be be on the lookout for when people promise you fast results or guarantee you results in this business, because there is no guarantee in the credit repair as far as me guaranteeing a time frame from you. So I can't really say, hey, I'm going to put you in a better situation, and I guarantee it that I'm going to put you in this better situation in 60 days or 30 days or 2 weeks. Now, many of you have seen my videos who I've given people results in 1 day and was able to remove everything from the credit report in 1 or 2 days. But that necessarily doesn't mean that everyone's going to be that way. All right. So always understand that there's a difference between credit repair. There's a difference between credit sweep. A lot of times you also get placed in the consumer affairs section of the credit bureau, because every time you send something that is fraudulent or said that something fraudulent on your credit report, they always look at it and take it seriously. The credit bureaus, although many people think, and they think it's a bad thing to, oh, they don't remove this, they don't remove that. They're actually there to protect you and make sure that you are being protected. That's why if you get a minimum of 5 to 6 negative accounts removed from your credit report, they place a small fraud alert on your credit file, and that is for your protection. You don't see it, but internally they know that, oh, this person has gotten 6 negative accounts all at once removed. What has happened? Let's place a minor fraud alert on the credit file, making sure that he's protected. So understand that. So police reports, someone telling you that they could do things fast, doesn't work that way. Credit repair, legally, the way of doing it is a process. Many people can get results in 30 days. Well, by law, they get results by 30 days. But what I mean is some people may get everything removed in 30 days, and some people will be more of a process. Okay. So the tool that we utilize, the Fair Credit Reporting Act, is designed to set parameters for lenders and borrower collection companies as well. And basically it's to keep everyone honest. So we have 3 types of credit bureaus: Experian, Equifax, and TransUnion. Okay, depending on the type of a company, they may pull either 1 or 2 or 3 credit reports, all 3 of them. So Experian, Equifax, and TransUnion, they each are owned independently. They each do things independently, but they still need to reply to you in 30 days by law. So they all have all 3 of them have their own way of coming up with a credit score. That's why you're always going to see 3 credit scores on your credit report. They're going to be different. You're going to have a high score, you're going to have a middle score, and you're going to have a low score. Your middle score is always going to be your FICO score. So when someone says, so what's your FICO? So you don't say, well, my FICO is 750. Yeah, but that's the highest credit score that you have on Experian. What is your Equifax? Oh, I got a 650 on Equifax. What is your TransUnion? Oh, I only got a 602. So your FICO is 650 with Equifax. Understand?
I have a question.
Sure.
So are creditors required to report to all 3 credit bureaus, or is it just 2 out of the 3, or do they have to report to 3 credit bureaus?
They have to report to all 3 credit bureaus so that they could report on your credit report that you're actively making payments to them. All right. So
what's the big why the difference in scores between each credit?
Because each of them has their own algorithm of coming up with basing your credit scores on your age, the age of the account, the type of account that you have, how long of payment history you have on that account, the limit on that account towards the balance, all that.
Algorithm-based.
It's algorithm based for each individually. Okay. But as long as you understand that, you have more of a better understanding when you go to finance something.
So between you checking your own credit and a lender checking your credit, it's always different. why is it different from you pulling it from different places? Your Credit Karma might give you one, your bank might give you a different number, and then you go for a loan and it's way lower than you actually think it is.
Okay, that's because Credit Karma is bogus and Credit Karma sucks. Why they suck?
Like Zillow?
Like Zillow, okay? They basically say they're free, but what they get paid on is whatever amount of whatever marketing they get placed on the bottom, as far as, oh, hey, look at your credit scores are 680. You qualify for this credit card. So once you click on that card, they get paid for that. But aside from that, they're owned by TransUnion, and TransUnion never really came out with a viable credit scoring model. So you have Experian and Equifax, which are the bigger ones, especially Equifax in the South. I know a lot of people, I get a lot of customers from the South. A lot of businesses run Experian and TransUnion, and they're mostly in the East and West Coast. And TransUnion also is more business related as well. There's a lot of Equifax credit unions that only run your Equifax report. So that's why when you go to these credit monitoring websites, they're gonna get a different, because each of them have a different credit scoring algorithm of how they're gonna come up with a credit score. Yes, your Credit Karma will show you a 740 credit score. You're so happy. But when you go to Equifax.com or Experian.com, you're gonna see that your score may be different. Even if you go to Experian.com and Equifax.com, those are all personal credit monitoring websites. The only real credit scores that you are going to have are the credit scores that are ran by a commercial lender. So if you they come to you, or they go to Eric Esteves to run their credit because they want to buy a house, they run a tri-merge report. That tri-merge report is a commercial credit report, and is only going to base your credit report is going to be based on what mortgages you've paid in the past. If you don't have any mortgages, they're going to base it from what installment account you have, and installment accounts are either jewelry lines, furniture lines, vehicle lines, lines of credit. If you have revolving accounts, which are all credit cards, any major or credit, consumer credit cards like Kohl's credit card, JCPenney credit cards, they'll base it on that. So that's why you're going to see different scores, because your real credit scores are only going to be ran by a mortgage lender, a car dealership, and a credit card company. When you go and get insurance, they also will do a soft pull, but that's also based on commercial as well. But no, I hope that answered your question.
Absolutely.
Okay, all right, cool.
10 more minutes.
Oh, yeah?
You can do all day long.
Oh, my goodness. You got to let me guys know so that I could finish fast for you guys. If any of you guys want to ask me questions during the process, this could be a forum as well. So how depending on the type of company you pull, or all three bureaus, so that's why I'm telling you right now, when you go for a car loan, they're going to pull installment accounts. When you go for a credit card, they're going to pull revolving accounts to see if you have good payment history with them. When you go for a mortgage, they're going to pull your mortgage accounts and see what you have there. So, okay. So how does payment history impact credit score, and how long? Well, payment history is impacted. Let's say, let's say Sophia, since she has the white hair, she's considered to be the oldest one in here. And let's say I'm 22 years old. But let's say Sophia is a young looking 40, right? So what happens is that if she has a late payment on the credit card that she has for 15 years, and I'm 25 years old and I have a late payment on a 5-year-old credit card, my credit scores will go down more than her credit scores will go down, because she has more of a longer payment history. So if you have a longer payment history, your credit scores, if you have a late payment or something negative comes on, it's not going to impact you as much as someone with new credit. So that's how long that's gonna take. And the difference between a hard pull with a mortgage pull, auto lender, insurance company, that's typically a commercial credit pool, which will cost you points in credit scores because you're allowed to have in the United States, we know that everything is based on credit. So they're gonna see that you're gonna have 5 pools on a yearly basis. The bureaus say, hey, you're allowed to have 7 to 8 pools per year because I know we're in America and everything is credit score driven. At the same time, depends on who pulls your credit. So let's say you go to Eric Esteves and you have 10 inquiries for a credit card and 10 inquiries for an auto dealer. When you go to a mortgage company, you don't have any mortgage pools. So they're not going to question your pools, your inquiries. So let's say you go to a credit card company and you have already 10 credit cards and you want to apply for another credit card, then you're looking credit hungry and you may be denied because you have too many inquiries on your credit report. Aside from that, a hard pull can reduce your credit scores, especially if you have negative items, a collection account, if you are maxed out on your credit card. An inquiry can reduce your credit anywhere from 1 to 3 points or even 3 to 5 points if you have like a 600, 500 credit score. When you're looking hungry, your credit scores drop more. When you already have 750 credit scores and you run 2 inquiries, it's not going to affect you as much. Okay? Softboard, Equifax.com. Bureaus, they don't, this is the myths about credit repair. People talk about if they don't respond between 30 days, by law it has to be removed. By law, the bureau's always going to respond 30 days. Maybe people who see my videos on YouTube with me giving people results in 2 days, 3 days, they think that everyone's going to get results like that. Well, everyone is different, but by law, the bureaus are going to contact you in 30 days. Whether I do it online, which leaves out the mail time that it takes for a dispute to go over to the bureaus. Once the dispute is at the bureau, the dispute needs to be recognized. So maybe you sent it today, it gets there on Monday, but maybe the dispute process starts on Wednesday of that week. Then you got to wait 30 days from there. Then you got to put mail time for the dispute to come back to you as well. So always remember that. People should claim that everything is fraudulent on their credit report. That's the worst thing that you can do. That's like another myth. And people who close out zero balance credit cards. Look, I know many of you don't have had it with credit cards. You're maxed out. You can't wait to get out of debt, and you close that credit card. Listen, I'm 25 years old, right? Let's say Sophy is a young looking 40, right? If Sophy has a credit card that is 15 years old and she's had it up to here with credit cards, she gets her tax return, she pays everything off, all right? And then she says, I'm gonna pay this off and I'm gonna close this account. She has just messed up her history of payment by closing an account that was weighing so much on her credit scores in a positive way. So once she closes that card, she only has 2 more cards that she's gonna base her credit scores on. But those 2 cards are 5 years old. So the main card that was helping her with her credit scores was her 15-year-old Capital One, and Bank of America. And once she closes that, her credit scores may go down because now that history is down, all right? So you definitely don't want to do that. Maybe you want, go ahead.
What if it's zero balance? When you close that, when you pay it all off, right? And you don't want the credit card anymore. So what you do is just leave it open?
Okay, so what type of credit card?
I don't see, I'm not that good. Let's call it a credit card. I don't know.
All right, cool. So there's different type of credit cards, right? You have bank credit cards, and you also have your Kohl's, your JCPenney.
Capital One, regular credit card.
Okay, regular credit card. Well, those credit cards have more of a weight than your consumer credit cards. And when you have those type of credit cards, you may want to close the consumer credit cards because they carry too much high interest rate. They get you on, November, December with get 10% off with your wholesale. You run an inquiry and you get this credit card, but it comes with a yearly fee and it also comes with high interest rate if you use it. So you may want to close those cards, but the cards that you actively have on your credit report, those are the cards that are actively weighing or giving substance to your credit scores. You see, whatever is on your credit report and you have a balance on it is good. Depends on how high of a balance you have. That's why we recommend people having 10 to 30% of the limit that they're using to make sure that the credit report is bouncing, to make sure that it's active, to make sure that if at any time you could reduce it, like right now, you say you have zero balance, it's there, but you know what? That history is also there of you having that credit card for 5 years. Once you remove that history on that card, that's it. Your credit scores are not going to be based on that credit card any longer. That's why I don't recommend you close it. If you're not going to use it, but maybe you want to put gas, $25, $30, but pay it off.
No, like what if you don't use like for a long, like say you had it for like a year, but you never used it, like it was zero for a long time, and you just was like, I don't even know where this card is, like you just close it up. You can't do that.
Some lenders will close it if they don't see any activity, but if I were you, if I have a credit card and I haven't used it in, a year, I would use that card.
Yeah, so I this past Christmas, they were going to close my Target card, right? Because I haven't used it. They sent me a letter in the mail, so my wife took care of that problem, right? So you gotta make sure if you keep it at zero, they're not reporting payment, right?
Yeah.
So going back to that 10 to 30% limit,
Credit utilization.
If your goal is to improve your credit, keep it at 30%, right? If you have $1,000, right, on the credit, keep it at 300%, even if you pay the minimum, right? But now every single month, those creditors are reporting to the 3 credit bureaus. That's gonna boost your credit, right? So don't close it out, because when you do close out accounts, it's gonna in the beginning it's gonna negatively impact your score, right? But yeah, you got if you have it, right, use it. Don't use it to the max. Right?
Remember, okay.
You said they close it out, so if they close it out, then is that good or bad?
They'll give you a warning before. If they'll send a letter to you or they try to communicate with you to let you know, hey, if you don't use it, we're gonna close it out. So
Correct.
if you don't, they will close it, right? So you got to make sure you're on top of that.
Remember, in the United States, it's all give and take, give and take. They want to charge you their interest while you get what you want, which is, credit, right? Anything that you want. Go ahead.
So to expand on that, so let's say you have 2 bank cards, one Capital, one Bank of America.
Mm-hmm.
One you just opened up a year ago, so same example, and the other one you have 5 years.
Mm-hmm.
So is it okay if I just keep the 5-year, the Bank of America one open for the one that I have for 5 years, and then close out the one with lesser credit history?
Is it okay?
Is it okay? Or should I still keep
Depends on what are your goals in the next 6 to 3 years. 6 months to 3 years. Because if you want to get a mortgage, you need to have at least 3 accounts on your credit report that are bouncing, that are active, that are doing something for you. If you have only one, you have very low credit and you have what is called in the industry a thin credit file, okay? So when you want to have a thick credit file has mortgage, installment, revolving, your consumer credit cards, if you choose to have those, lines of credit, those things. That's a strong credit report, especially if you owe 10 to 30% of the credit utilization on those credit cards. Just like when you go get a mortgage, everything has to be working. You have to be working for 2 years. You have to be paying taxes for 2 years. You have to have money. Plus, you need to show that you are responsible. It's just like that when you go for a vehicle loan. Just like that when you go for new credit cards. Okay? So, I only have a couple of minutes left. How you can control your credit cards? Well, the best way you can control your credit is by just paying down your credit cards. That's the only time where you're going to boost your credit scores organically. All right. So if you want to boost your credit scores or add what I say steroids to your credit scores, you can get added as an authorized user to someone's credit card. All right, to a family member or a friend, they can add you as an authorized user on that credit card. The history of that credit card is $5,000. That credit card is 5 years old. The history of that card being 5,000, 5 years old, transfers over to your credit report, giving you a minimum of 20 points worst case scenario in boosting credit scores. Let's say you don't have any negative accounts on your credit report. Then if you add that credit card onto your credit report, your credit scores could go up 40, 50, even 60 points, especially if that account has a long history. Sure.
Question. Is it authorized user or joint user? Because I remember that mortgage companies didn't want to allow authorized user accounts.
Okay.
Because people were doing that. Would joint be the way to go?
I haven't heard anything like that. Yeah, Eric?
Yes. Yes, I'm here.
He has a question.
What's the question?
Will the mortgage company allow authorized user accounts or only joint user accounts? Because I remember there was a time where people were doing just that, adding authorized user accounts just to build credit and then go for a mortgage.
Yeah.
So I remember there was a time when they weren't allowing that. Is that still a thing, or is it?
Yeah, well, the thing is we need to have the credit scores, so that's a great tactic. The authorized user is still something that we can do to build credit. So I work with people sometimes. It's not like, yo, hey, I'm ready to buy a house tomorrow. Like sometimes this is a process, right? So I was working with a family where the grandfather wanted to refinance, and we were going to save him $700 a month in his refinance, but the only way he can afford it is if his grandson was put in the mortgage. His grandson was 18, he had worked part-time for 2 years, we had to use his income, didn't have any credit. So what do? Right? Authorized user, right? So we took a credit card that wasn't maxed out, because that maxed out credit card is also going to show on the grandsons, right? So we said, okay, well, what credit card do you have that you don't have as much utilization? The 30% is that ratio. That helped, right?
Correct.
So we have that one. Second thing we do is we get secured credit cards. So we tell the individual, we say, listen, go to your bank, put $300 down in your Bank of America. They're going to give you a secured credit card. Once you use that, like if you put $300 down, you're going to be able to use $300 of credit, right? You can use that, and every time you make a payment, they're gonna connect it to the credit bureaus every 30 days. So now you have 2 credit cards on your name, right? And that's a trick to build credit. I'm building credit right now for my 15-year-old. I want to start building credit for my 15-year-old daughter, right?
Correct.
So that way, when she's ready, right, she'll have a great credit score right off the bat. So the thing is that you can actually build credit by authorized user by doing those joint accounts and whatnot. But they have to be in good standing, right? Because if it's in poor standing, then it's also going to reflect in that.
Oh yes, and it also needs to be paid down 10% or 3%.
Yeah. So you want to do that. Now, once you do that, and it took, here's the thing, it's a process. It didn't happen right away. It took 6 months for this person's score to populate, because if you don't have any credit at all, it could be less than that, but the credit bureaus have up to 6 months to show a score. Right, so the minute that we showed a score, we were able to refinance. You know what I mean? And his score, I think it was like a 692, right off the bat. You know, with three credit cards. We had the secured credit card, we had the authorized user, and then after 60 days, and he applied for a small, consumer credit card, right?
Correct.
And then with those 3 cards, he's almost at a 700 off the bat. So those are easy. So that just takes a little bit of time, right?
It's just a way for you to restart the process of you building credit until you get to the big boy $20,000, $10,000 credit cards, which you can get to. Go ahead.
So, going off of what you guys just said, I have a 15-year-old that's been an authorized user on my cards for a couple of years now. So by the time she's 18, she's going to have a long history. Credit history. I don't want to co-sign for a car. If you miss payments, it's on you. So my job as a parent, I'm starting to help her build her credit and added as an authorized user. Also, my parents, they had their score in the low 500s, and I added them as authorized users. They're refinancing their home now. They're in the high 6s now, just because I added them as authorized user to my credit cards.
But that's
Correct.
when you have to talk to like a credit specialist, because every situation is different, and it's a puzzle, right? So we have to look at it, and we have to see what is it in this person's credit history that we need to do in order to improve it,
I
right?
just have to be careful,
So-
because like my mother called me, you missed the payment. I'm like, no, I didn't miss the payment. It's like, showing on my credit. I'm like,
Yeah.
there was something fraudulent on my credit that I had to call the card and have them take care of it. But it will affect everybody that you add to your as an authorized user.
Oh, yeah.
It will affect their credit.
Conversely, you can remove people. So there was another purchase that I was dealing with that somebody's joint credit, because they say, oh, somebody says, oh, I'm gonna go ahead and add this person as an authorized user, but that person's credit card was maxed out. So the minute we remove that, because that person also had other credit history, her credit score set up about 8 points, 9 points, and that's all we needed in order for us to get a mortgage, right? And
Correct.
we were able to do it. We were able to do a rapid rescore, and in 7 days we got a new score. So so there's every person's situation is different, and that's why someone like Gizzy is gonna tell you, right, to figure out what's the best thing to do.
Correct. Go ahead.
How old or how young should we put, let's say, our children on, just for that? What you all mentioned.
Yeah, it's not gonna report until I think 18, right? If I'm not mistaken.
No, it should.
No. They gotta run an inquiry. Don't you remember? I mean, I'm Spanish. My mom had, my mom had the light bill under my name when I was like 10. You know what I'm saying? So, if you Spanish here in Jersey, your mother messed your credit up when you were
Don't
younger.
show up on credit report, right?
No, but they still ran an inquiry. And in order for the bureaus to recognize who you are, you need to run an inquiry, because an inquiry tells the bureaus, all three of them, who you are, where you live at, and what's your SSN.
But the question, just I want to make sure we clarify.
Sure.
So even though you can start adding as an authorized user, will a report, will a score show before the 18 years
Oh,
old?
yeah. You can still have it. You're 15, 16 years old.
You can have a
I know people with...
Yeah, my daughter jokes around about having an
So she has a credit score already.
750 credit score, and
Okay.
hers
So
is higher than
so
mine. Yeah.
that's something I did not know. I thought it took a while, so even better. So you can start doing that now.
Yeah.
Great.
So, I hope I get another 5 minutes. Okay, great. So, but you see when he said, get a secure credit card, and he went and he got another small credit card. That's if you want to get whatever you're trying to get like now, just have those credit scores. But what about if you're a business owner? What about if you're already responsible and you make a lot of income and you have small credit cards? You have no business with small credit cards. The small credit cards are the worst credit cards to have because they are easily maxed out. And if you're late on a small credit card, like really you were late on a $300 credit card, my main thing is you add an authorized user that is a high limit authorized user, anywhere from $10,000, $15,000, $20,000 credit authorized user. Once that shows up on your credit report, the banks want to lend to what they see what is on your credit report, right? So if they see that you have a $15,000 credit card, more than likely they're going to count how much money you make minus your expenses, but more than likely you'll get another $15,000 credit card. All right, so whatever you're showing on is what they will give to you and extend to you as far as your revolving credit cards. So if you're a real estate investor in here, if you're a business owner, you don't want to deal with $500, $1,000 credit cards. You want to deal with $10,000, $15,000 credit cards, because let's say you need to use it as an emergency for your business and you need to run $5,000 and you already have $30,000 in open in limits. So that means you're only using 5,000 or 10,000. You're only using anywhere from 15 to 25% of your credit utilization, which your credit scores are still going to be in the lower to mid 750 credit scores. So always be mindful of that, because in the United States, let's keep it real, you can manipulate it, okay? And I'm not trying to say manipulate it in a bad way. I'm trying to say you manipulate it to whatever you want it to do for your stuff or whatever it is that you're trying to make. Yes?
How soon after that can you remove the person off?
Oh, you can ASAP. What happens when you add someone as an authorized user is you add them as an authorized user, and the envelope that comes in the mail is going to be in your name, right? And then whatever is in whatever is inside of that envelope is going to have that person's credit card as an authorized user. Okay, it's your responsibility to either give it to them or not. You don't have to give it to them because your history has just gotten added to his credit report, increasing his credit scores. All right? Yeah.
I have one question for you. Let's say someone has 10 years ago, 12 years ago, they had a credit card or 2 or 3, and they just stopped paying or didn't do anything with it, and they have not applied for any credit since.
Okay.
Is there a timeline or time frame when that falls off, or?
Yeah, there is a 7-year, 6-month time frame where negative accounts will fall off your credit report organically from the last date that you made payment on that account.
Okay.
So let's say I have a collection, and let's say you have that collection, and it was 5 years ago, and you are now 5 years into your 7 years, 6 months. Let's say they offer you a settlement. They say, hey, can you pay for this? I will give you can settle it for 30%. What happens now is that you just re-age that account.
Mm-hmm.
And now, instead of you having 5 years into the 7.6 months, now you start at month 1, and that negative is going to be there. That's why I don't recommend people paying their collections account, because you may re-age those accounts. We recommend you remove them first, and then once they are removed, once they are removed, you could call to settle the account.
Yeah.
Sure.
Right. Can we hold off all the questions for a little bit, because then he'll be wanting to extend his time?
Well, I want to get into the process, but this is also the process. But the bureaus have 30 days to get in contact with you. Any customers will expect the results between 20 and 30 days. We can remove all types of accounts: public records, foreclosures, short sales, collection, child support, late payments, repossessions, student loans. They all could be removed. And we also, do things our way. I know I have 1 more minute, but let's say if you want to get in contact with me and I give you a quote for the service, and even if you say, Gizzy, you're too expensive at the moment, I don't have $800, I don't have $1,000, we also have a $99 do-it-yourself credit repair system that you could benefit from. It has been sold over 4,000 times, and it sells every day. But that's for the people who want to do things economically, and people who also want to educate themselves on the process. So again, this is all about being positioning you. Credit repair is all about positioning you to do what you want it to do with your credit. So if your main goal is to get a mortgage, the focus is to position you to get a mortgage. You don't need a 750 to get a mortgage in a good rate. All right. You don't need a 750, 790 credit score to get a good credit card. You want to be in position to do those things so that you can move on with your life. But so yeah, credit repair is a process. Remember to be responsible with whatever you are paying on at the moment, especially if you are in the credit repair process or right now. The credit card companies want to see that you are a responsible person. So make sure that you are able to show that on your credit report so that they can go and extend credit to you. Again, we commit to our customers until everything is removed from the credit file. Just because someone gives you, just because one bureau is done in 30 days doesn't mean that Experian and TransUnion will follow suit. Again, it's a process for each bureau to delete all of the negative accounts. Focal point is to get you guys into position to do what you want to do. Again, you guys can contact me. GizzyCredit here. Thank you so much. Culture Estate. I'll see you guys later. I'm going to leave this on and the next speaker so you guys can see this first time home buyer seminar. Thank you so much.
All right, hey, we're gonna do a little quick setup. I know we're gonna introduce our next speaker.
Yeah, so if you guys have any questions, is a great time to ask Gizzy right now.
Oh yeah, if you guys have any questions, but you guys already asked me.
You guys can have them. You're ready to shut them off. I'm sorry.
Am I good? Any questions? I still have YouTube Live. I'm going to be educating other people. If you guys...
So, as far as your, how you charge, it's case by case, it sounds like?
Oh yeah, it's case by case. Because you may have less negatives than the next person who has negatives. So it's all based on how many negative accounts you have in your credit report. So you can have 1 to 20 negative accounts. But no matter what, you don't, like I've been able to remove in 30 days from one bureau, like 23 negative accounts all at once. And everything gets removed from the credit report. And I have videos on my YouTube channel about me doing that. But I also have videos where it's taken me a process to position people to do what they want to do. Like I got a customer in Texas, his name is Michael. And in 6 months, he was able to get a car for him. In 9 months, he was able to get another car for his wife. By the 12th month, he was already purchasing a home. So it's a process, you know? Depends on what you want to do. If one bureau gets done, we know banks that we could send you to where they're only going to run that bureau. And we know that you're going to qualify for whatever credit card you want from that bureau because you are in position funding. That's what it's called, funding, or get high limit credit cards. So we also have a $99 do-it-yourself credit card funding system that teaches you what your credit report needs to look like in order for you to get these high limit credit cards. We could do it yourself. We could do it for you, but we also charge 10% for whatever monies we get you in the credit card. All right, so
really quick, before we present the next seller.
Sure.
The next seller.
That's messed up. I'm not selling. I'm educating you guys.
Hey, wait, Gizzy, have you done anybody's credit?
Actually,
are, like, here
today? Gizzy has a client in New Jersey, and his name is Hugo. Me. And I'll speak just really briefly about my experience with Gizzy and his team. The first thing is that if you look at the credit repair process as a cost, you'll never commit. That's number one. Oh, yeah, it's 100% an investment. The work that these guys do is, I can imagine, a pain because I've tried to do it myself, and that's how I lost my shape up over here. I lost my hair. So honestly, it can be Gizzy, it can be anybody. But again, don't look at it as a cost. That's number one. Number two, be patient because he's 100% right. Some things fell off immediately with one, and it took almost a year. Number three, when it looks from a cost perspective, if you're thinking about monetary, money, the services that Gizzy and his team provide versus everybody else, number one, I feel like they're exceptional. Constant communication. Number two, from a cost perspective or a money perspective, I would have paid almost quadruple by now. I think Gizzy and his team have been working on my credit for over a year. It's good right now, but I can tell his team is trying to perfect it and position me to do whatever I want to do. But for what I paid versus what other companies will charge on a monthly basis, I would have paid almost triple to, if not 4 times over. So thank you. I really appreciate it, man.
Thank you so much.
But again,
it hasn't been a pain that much, but still a pain.
Come on.
All right, so who's
Oh,
next?
how cute.
Yeah.
So how did you like him? Good? You guys learned something? Make you look great. All right. Well, I guess I didn't introduce myself before. My name's Sophy Ramirez, not Sophia, but it's okay. You can call me whatever. This is my partner.
Hi, I'm Anna Gravetto.
We're Boss Associates. That's what we call ourselves. We're realtors. But anyways, enough about us. Up next is our great, amazing lawyer, which his name is Chandra Singh. I was looking for a lawyer when I needed to do a deal, and the lawyer that I wanted to use, I was on vacation. So someone referred me to Chandra, and it was the best thing that they ever did because Chandra is amazing. He has this amazing app, which is Track with Ease. I don't know how many times I've said amazing because it's great.
You're amazing.
All your realtors need to use him. Everybody who's planned to buy a house need to use him. He is great. Or amazing. Well, anyways, without further ado,
Thank you so much.
Chandler Singh.
Oh, should I use the mic or do I need the mic? Guess for your purposes. Okay, great. Hello everyone. How you guys doing today? All right. I won't try and keep you in the basement too long. We have a nice lunch for you. And I just want to talk to you, very candidly about the home buying process. So again, my name is Chandler Singh. I'm a licensed real estate attorney out here in New York and New Jersey. Predominantly New Jersey is my practice. I've been doing it for about 18 years now. Some people say, oh, wow, you look pretty young. That's the dark and lovely in my hair, so don't be, confused. I freshened it up this morning for you. But realistically, I've been a part of about 5,000 plus real estate transactions in my career. I'm also a licensed agent, so I sold real estate when I started at 18. So I have a pretty fresh perspective on real estate in general from both the agent perspective and as an attorney, of course. And I just want to talk to you candidly about the process and just ask you a couple questions while I do that. So first and foremost, has anyone, I know you're first-time homebuyer seminar, but have anyone been a part of a buying process with like a family member or a friend or, at a time? Okay, cool. So some of you are familiar with it. Others are this is just the first take. So I'm not going to get into the really technical aspects of it. You'll hear from people sometimes. There could be horror stories about the home buying process. But really, it's pretty simple. And it's a team sport, real estate. I'll tell you that first and foremost. So you have to work with a competent realtor, like the people here, mortgage broker. If you're looking to improve your credit, guys like Gizzy, be honest with you, Gizzy did my credit as well. So I bought a lot of property in the high real estate market, and unfortunately the market crashed in 2008 and my credit was impacted. And after a long search to find someone who could do credit repair, I came across Gizzy, like most people, on a live feed somewhere, and he started working with me, and it exponentially improved my own credit. So I'll give you that little tidbit, and I thank Gizzy for that. So without further ado, I'll just move forward through my presentation. You can stop at any time if you have any questions. As first-time home buyers, I'm just going to candidly talk to you about some of the things to look for. And like I said, when you get to that time where you're buying, you definitely want to work with, a good team, because between the attorney, the mortgage broker, if you're working with someone who's going to help you, get to the point of buying, say with credit, realtor, your home inspector, things like that, they all work together to get to a common goal of getting you closed on time in the house that you want to buy. Maybe your first home that you're buying, and then start, and then obviously people move on and buy second homes and so on and so forth. So not really going to talk much about my background. I've just been involved in real estate for a very long time. So it's about 22 years now, and dating myself saying that, but yeah, I've been involved in it for a while. So let me take you candidly into the process, right? So what would happen is, once you get to the point where you're qualified with a mortgage broker, you'll start looking in an area that you're interested in to find a home. Of course, you'll work with one of the agents here. They're obviously extremely good. They have, I think, the top office here in Scotch Plains. They're doing really well. And I have the privilege of getting to know and working with some of the finer agents here. So once you do find that house, then there's a whole legal process that happens, right? And I want to explain that to you, but I also want to give you some things that you can remember that you want to focus on, right? So first and foremost, and people, I want you guys to understand, when you find that house and you put an offer and that offer is accepted by the other seller, in New Jersey, northern New Jersey and central New Jersey especially, there's a concept called attorney review. Right? So what that means is, once your offer is accepted, you don't have a contract legally in New Jersey yet. There's a 3-day attorney review period. Now, that process can be extended mutually by the attorneys. But what happens a lot to buyers, and especially in this market, because right now we're in a very significant seller's market. And now, even though the interest rate has risen about 0.75% in the last 12 months, we're considered to be in a seller's market right now, meaning anyone who has a decent property and is putting it on the market is getting multiple offers. And what that means for you is that you've got to be able to get in and out of attorney review very quickly if your offer is accepted before someone else comes in on top of your offer and outbids you. And that happens a lot. So that's why our agents actually like us, because my office just 100% real estate 100% of the time. We never go to court. We never leave the office. I chain them to the desk for the day, for the 8 to 8, right? The staff. And we just process real estate law. It is that kind of business where if you're not doing it full time, you shouldn't be doing it as an attorney, to be honest. Because attorneys that go to court and aren't in the office to deal with the fires that could come up in this business are doing a disservice to their agents. That being said, you're not under contract until you're out of attorney review. And just to quickly explain that process, most attorneys, and I actually have an outline in my pamphlets that I were handed out with my law firm information and my card and some of the details. I have a first-time homebuyer tutorial in there. It's a 1.5 page read, so you guys can look at it whenever you can, which explains the process. But attorney review is just, say I'm working with you, and what was your name? Padaro. Say you're my client, Padaro, and the best way to explain this is by example. Your offer is accepted, right? They take you to a house, you get the offer accepted, you're super excited. They refer you to me. I'll talk to you real quick, and then I'll send a letter to the other attorney. I'll say, I'm representing you, and I'm adding a couple of terms to the contract to better protect your rights. All of these offers that the agents use are a standard offer form that's basically created by the state, the Board of Realtors. Some offices have different variations, but it doesn't become a contract until your attorney looks at it and reaches out to the other attorney. So Padaro, what I would do is send a letter on your behalf, so I'm representing you, and I'm adding, I want to give you more time to get the mortgage, I want to give you more time to put up your deposit, and we want the seller to make some more representations about the property. Like one big thing that comes up in New Jersey are oil tanks, right? So back in the 80s and 90s, it was acceptable to leave the oil tank underground and decommission it with foam or sand. And that's what most companies did, because sellers did, because that was the cheaper option to do. The law hasn't changed, but what has changed is the understanding from sophisticated buyers with the advent of the internet and dissemination of information that oil tanks that were left in the ground have leaked post decommissioning, meaning they were supposed to clean it and get it out of the ground, or decommission it in the ground so that it was safe. But 20 years later, the tank still had oil in it and it rotted out and it leaked. That creates an environmental issue for the seller and for the potential buyers now in the 2018, right? So I see 100% of the time that sellers who have a tank in the ground, we almost 100% of the time, my contract writer says, if you have a tank and whether you decommissioned it or not, we want it removed, because you want your kids to be able to play in land and soil that's not contaminated, right? I mean, most people would agree with that. So that's something that goes in my attorney review letter to better protect your rights, right? Because what happens is, and the rights of my agents, what happens is if we don't do that, you buy this property and there's contamination or something, and we let you close with the tank that's in the ground, who are you going to look to 15 years down the line or 10 years down the line when something happens, or you can't sell the property because the tank is still there? So you got to be conscious of those things and who you work to. But any attorney worth their salt who does this business will be able to represent you in those regards, right? So attorney review, very simply, is just sending a letter, receiving a letter back, and having what they call a meeting of the minds, so that both you, right, Padaro, myself and you, and the other attorney and his client agree on the final terms to the contract. And then we have a binding contract in the state of New Jersey. Nobody else can put an offer on that property. That house is yours as long as you can meet the dates in the contract, like put your deposit, do your home inspection, and get your mortgage, right? Those are the 3 keys. I'll take care of everything else, title, survey, and all that, which I'll explain quickly. But those are your responsibilities. Make sure you put your money down, make sure you do a home inspection, and make sure you apply for your mortgage, right? And we help you with that process. We basically remind you to do that. So inspections. This one's important. A lot of first-time home buyers, and I work with a lot of first-time home buyers in my business, they have an expectation, and I always try to educate my agents when I speak at events. They have an expectation that when they're buying a house, that they're getting the Taj Mahal, like it's a brand new property, right? Because they're first-time home buyers, so they don't know better. So when I was a realtor, and now I tell my realtors, and when I talk to you, Pedora, I would tell you, I say, Pedora, look, you're going to do a home inspection, right? Now, I don't want you to have delusions of grandeur here, because what you're looking for when you do the home inspection are major structural defects with the property. Those will be plumbing, electrical, roof, foundation, oil tank, asbestos, things like that. You don't like the paint color? That's not, you know, we can't make a representation on that. There's spackle and paint issues. Nope, we can't do that. The floors are scratched. Well, you saw that when you went into the house. Sorry. Like, I'm trying to build a realistic expectation for you, not to go in there and think that you could just ask for everything, right? Another thing that happens a lot is that every house has mechanical systems, right? So mechanical systems are the furnace, and I'll say the roof for lack of a better, you know, terminology, say the roof. Now, if the roof is 30 years old, but it's not leaking, right? The seller doesn't have to replace it. They don't have to do anything. Even if the shingles are curling a little bit, they don't have to do anything. People go and they have an expectation the roof has 4 layers. They have to re-roof the house for $15,000. They don't have to do that. Now, if the roof has a leak or has patches that are, you know, there's a lot of wear and tear, we can ask for repairs. But the essence of contracts in New Jersey are as is, meaning you have an inspection right. The seller is selling the property to you as is, right? So if you do your inspection and you find structural problems and they don't want to cure it, then you both can walk away, you get your money back. That's basically what happens. And it happens about 10% of the time. I see 10 to 15% of the time we can't resolve inspection issues and the deal dies. Mechanical systems like furnaces and hot water tanks, they have a certain shelf life, right? So a hot water heater could last 12 to 15 years, right? A furnace can last over 30 years, right? The fact that the system is old doesn't mean that the seller has to replace it. So be conscious of that when you look at houses and you walking around. I mean, people walk into a house and they're just like, oh my God, it's so beautiful. Like, I want this thing. But I would say to you, suggest to you when you're looking at the house to maybe take a quick look at the water heater or the furnace when you're in the basement. Just, you know, look at the date on it. Because if it's working and it's 45 years old and you make an offer on that property, you're probably going to have to close with that furnace. They're not going to replace it for you unless it's not working at the time of your inspection. Right? So the fact that a system has reached its useful life does not mean that the seller has to replace it. So keep that in your mind when you're making offers. If you think to yourself, oh, I'm going to want to replace the furnace in this house, but the furnace is 40 years old, and I'm telling you or suggesting to you that that seller is not going to replace that furnace. That could be a $10,000 change, $8,000 change, right? So I'm just telling you to keep it in the back of your mind. So that's the home inspection. What happens, Pedora, you do a home inspection. We would talk about the report. You would tell me what the problems are. I would send them a letter. We have a back and forth negotiation. And then at some point, we have a resolution. Whether it would be, they're going to give you, there's a couple of ways inspections get resolved. One is, they're not doing anything. You accept that. Cool. They're going to give you money back, and you accept that. Or they're going to do a mix where they say, oh, we're going to fix these 3 items, and we're going to give you $1,500. And then, for the most part, you probably just take it, right? So that's the home inspection, right? Continue about that. I just talked about what those things are. Mortgage contingency, I'm not going to really beat this to a dead horse because he's going to have a very, nice conversation with you about mortgages after, and I've done a lot of work with him. We actually speak together at other events, and his work is impeccable. So basically, what I would tell you about the mortgage contingency is to stay on top of that date, right? The contract is going to say, Pedora, I normally give you 35 to 40 days in my rider for you to get a mortgage, right? So if you know that, they got to start the process right away, right? I have clients that are like, oh, well, I'll wait 2 weeks to apply for the mortgage. I wait till I do my home inspection to apply for the mortgage. I am suggesting to you not to do that because those clauses are mutually exclusive. So if you wait for your inspections to get resolved, that could happen 2 to 3 weeks after we get under contract, and now you're behind the 8 ball to get the mortgage timely, right? So I would suggest to you, everything happens in conjunction with each other. You send your deposit, you do your inspection, you apply for your mortgage all around the same time, which is within a couple days of getting under contract, right? So I'll move on beyond that. This is some technical stuff, but I just want to, explain to you it. So every property in New Jersey, when you buy it, you have to order a title search, right? And basically what that is, it's a one-time insurance you pay to protect you against any loss, right? Because usually for people buying their home, their first home, or whatever home they end up in at the end of their life, is their biggest investment, right? So you want to protect that investment. And how you do it, besides getting home insurance to protect in case, it burns or you have a flood or something like that, is you have to get title insurance. And what that does is it insures you against any kind of defects in the title, any kind of taxes that are owed, anything unscrupulous that the seller may have done, and seller judgments, and also just protects you against loss overall. It's a one-time fee you pay. It's not like car insurance, which is payable every year. It's an insurance that you pay one time when you buy, and you have it for the life of the property, that you live in the property, right? The other thing is the survey is a technical drawing of the property. I have clients who come to me all the time and they're like, oh, I want to save the $700. I don't want a survey. And I just tell them I can't work with you. Or you have to sign a waiver, because for me, buying a property without a survey is a tantamount to driving your car without car insurance. Because I have been involved in a lot of transactions, and I've seen the reason why I came to this position is because my own father was buying a property one time. And I was 24, just got out of law school, and I was working with a firm, and he's like, let's just close, no survey, no nothing, right? So we closed, and then turns out he was buying a 50 by 100 lot, and the survey came back after we closed, and the property was only 25 by 100. The other 25 was owned by the city of Englewood. So it took us 2 years to get a deed from the city of Englewood for the 25 feet that we would have known wasn't ours if we did a survey. So that was a very early introduction to malpractice. Thank God it was my dad. But we learned, and I was working with a firm at the time, so I'm not going to take full responsibility, but we learned that never ever buy without a survey. I just highly recommend it, because you might want to put up a fence, you might want to do a deck. You need a survey in order to do exterior work to the property, right? So if you were going to do any exterior renovations to the home or expand its footprint, you need a current survey. Most lenders now are going to require that you have a survey. You can use the seller survey if it's within the last 10 years. So a part of my attorney review is asking the seller, if you have a survey within the last 10 years, would you mind signing an affidavit that we can use that and close? It saves you $700. Most people want to save $700, but I would recommend don't ever buy, no matter who you ever work with, without getting a survey to your property, okay? Preparation for closing. So people always have like, how's the closing process? What happens at the closing? The closing is a very simple process. Basically what happens is 24 hours prior to the closing, you'll get the numbers from the bank and the title company, right? They will email or call you and say, you have, your closing is tomorrow and on Monday, and you have to bring a check for $25,000. Right? You would bring that check payable to the title company, and they do all the disbursements. It's a very simple process. Closing actually takes about an hour, depending on the package from the bank. So the closing process could take like an hour of your time on the day of closing. You will do a walkthrough with your realtor, so you'll set up to do a walkthrough. What a walkthrough is you do your home inspection, right? Seller's going to make repairs. Plus they have to move out. Right? So the walkthrough is to make sure the house is in the same position that you saw it when the home inspection was done, and that the home inspection items that they said they were going to fix are completed, right? So you'll go into the home and you'll see, oh, they're going to fix the faucet. They have a leaky shower head. They were going to do this other fix for you. You go and you check that out. You flush the toilets. You run the hot water. You make sure everything's working. You turn on the heat. You spend like an hour at your walkthrough just making sure the house is still, because it's going to be yours, right? The minute you close, the house is yours. I had a situation one time that we were about to close. Client went to the walkthrough, right? The closing was not until 5 hours later. Turns out, I don't know who did it. Somebody left something on during the walkthrough, right? And the house got on fire. And When we got to the closing, somebody called the guy and was like, yo, this house you're buying is on fire in the back. There was smoke bellowing out. They hadn't closed yet. They weren't the owner. So what happened was the closing got canceled. The homeowner's insurance paid for the repairs, but we had to wait like 60 days to close, or like 90 days. It was a long, long time ago. I don't remember. But if they had closed, like actually took the deed from the seller and that house burns down, you now own a burned down house. Like there's nothing you can do. So that's why once you close, you own that property and all of its problems. So, and all of the happiness it's going to bring too, but I'm just saying that's why when you do the walkthrough, you make sure that the stuff is working, right? Because I just got a call yesterday. My client closed on a house, and well, I was representing the seller, an investor, and we sold the house on Wednesday. I got a call yesterday. The hot water's not working. They're at Holiday Inn, the buyers, and they calling me like, and sometimes you have to be stern in this business. And I told the attorney, I said, well, did your clients do a walkthrough? They were like, oh no, they skipped it. They just wanted to come to closing. Then I said, and they have a busted hot water tank. My client's not going to do anything. I'm not going to call my client. That's it. That's really the bottom line. So, that's what I'm saying. Protect yourself, right? And then the closing happens in two parts. Last thing is when you close, the documents get recorded. You get copies of everything. The deed gets recorded in the county, wherever you buy. That takes about 90 days to get recorded and come back. And then your attorney or your title company will send you a copy. Send you the original deed recorded. A lot of people have this thing about that they need their original deeds. I gotta have my deed. As long as you have a certified true copy of your deed, you're fine. You don't really need the original because the original is recorded and it's of record. And whether you have your original deed or not doesn't matter, right? But there are people who get hung up on like, oh, I gotta have my deed. You really don't. As long as you have the copy and it's a certified true copy and you get your title policy in about 4 months, then you're fine, right? Lastly, I would tell you, again, so I've been doing this for a while. We have a pretty good process and system to work with our buyers. Like she mentioned an app we built for the home buying process. And what it does is it takes a lot of the human element out of it, meaning I'm human and I'll forget to follow up with you about your deposit, right? Because I'm representing 100 other buyers, right? You're busy because you have a life too. You're working, you have your girl, you have your kids, you have whatever else is going on. And there are very critical dates that occur in a real estate transaction. There's about 5 to 7 critical dates that happen in a transaction. Some of them pertain to just me. Most of them pertain to just you, right? Deposit, inspection, appraisal, commitment, sellers, COs, which is a certificate of occupancy because the town has to come and inspect the property. 90% of the municipalities in New Jersey have a CO requirement, meaning when a seller is selling the house to you, they have to have the town come to inspect it to make sure that it's habitable, make sure they have carbon monoxide detectors. That's big now because, obviously that's a gas you can't see, and have smoke detectors, right? Every municipality has a smoke, it's state law. Every municipality has a smoke detector requirement, so you will know when you move in that the house has carbon monoxide and smoke detectors, which is obviously there to protect your family. But like I'm saying, these critical dates, we take the human element out of it because the application we built basically contacts you to remind you to do things. And once we get out a review, we set that up. So myself or the girls here in the office, we don't have to really reach out to you to do that. It will continue to follow up with you. But it will say, have you sent your deposit? And until you reply yes, it'll email you every day. Right? So it's going to get annoying. It's going to get on you because we know how critical these dates are. So we want to make sure that you've handled the business. You know what I mean? Because we're going to handle it on our end, what we need to do for you. That being said, guys, 20 minutes. Good. So 20 minutes. That was my presentation. And I'm willing to obviously take questions. My paralegal is going to be here in a couple minutes to take questions. And we have a great lunch for you. So does anyone have any questions about the process? Yes, sir.
Do we have a soft copy of the legal process for the first-time buyer?
Yes, it's in the pamphlets. There's a pamphlet in the folders about the process. Yeah, and it's written from my experience as a home buyer myself, attorney, and Realtor. Any other questions?
Culture Estate. I work very tightly with the entire group that you saw here on a personal level and on a professional level. That's okay. But right now I wanted to present our next speaker, Eric Esteves with First Alliance. We work together. We do a lot of outside of here work together, a lot of seminars. And honestly, I can't say enough about Eric. Very supportive, always willing to go the extra mile to help someone from the mortgage aspect or just bring knowledge to the table from all different aspects. So you don't have to limit your questions just to mortgages to him because he's extremely knowledgeable. He's been in the business for years. So let's give it up to Eric Esteves from First Alliance.
Thank you. All right, well, thank you. Thank you for the introduction. Thank you, Louis, and the entire Culture Estate team for putting this together. I always feel that providing these seminars and giving back to the community is very valuable. So I'm happy to be here. So I'm here now after lunch. I got the hard part, right? Because I know some of you guys already like, oh, I want to go home and it's nice outside, but we're going to try to rush through it. I'm going to talk about the mortgage process, and we'll also touch a little bit upon the real estate transactional process as well, right? Because of some schedule conflicts and changes, we had to kind of change the order around, but very, very open, right? If you guys have questions, please stop me. I want to make sure that you guys are getting what you came for. So without further ado, I'm going to talk about the most sexy part of buying a house is the mortgage process, right? No? No. So, cool. So path to home ownership, right? So you can see yourself living in your next home. How many of you guys are looking to buy a home right now? Yes, no, maybe. How many of you guys maybe in the next 6 months to a year want to buy a house? All right, cool. So, and then some of you guys are some time away, but at the end of the day, it's good to know the process anyway, right? So what are the reasons to buy a home? What's a good reason to buy a house right now? Equity. Equity. Awesome. Investment. What was that? Low interest. Right. So let's talk about interest. So interest, right? People say, oh, interest rates are getting higher and whatnot, right? Did you know that the last 47 years, the average interest rate was 8.35%? The last 47 years. So right now we're looking at, in the low fours, right, for interest rates. So we're still in historic lows. So yes, the projections are, and we'll talk about some of the projections, but the projections are for it to continue to go higher, but still we are in historic lows. So it's still, the best time to buy was 5 years ago, right? So that's always where we're at. So you want to make sure that there's a lot of positive, there's a lot of positive things about buying your home. So what are the reasons? So prices will continue to rise. So any realtors in the room, what percent increase is your home value rising per year in New Jersey in this area? Throw a number out.
5%.
5%? And that's really aggressive. That's great, right? 5%. Even if it's 2%, 3%, going back to what Hector was saying, right, about equity, you're talking about your house is growing even at 2, 3, 4% a year, right? That you're growing in equity, but not only that, you're paying your mortgage balance down. So your equity is growing in both ways in essence, right? So probably the best reason to buy a home. Mortgage rates are always changing. So even though, right, we're still at historic lows, they are projected to rise, right? That's a fact of matter. Whether renting or buying, someone is paying the mortgage. So wouldn't you be the one wanting to pay the mortgage, right? When I sit down in front of families and we calculate the rental, what they rent per month, and we multiply that by 3 or 4 years, it's tens of thousands of dollars that we're basically throwing away, right? If you have your home, you're paying down your mortgage, your balance, and the price is going, so you're getting equity. So it's always better to own, right? Owning is a form of forced savings, right? So going back to that, you know that you're going to be, that you're it's and I'll get to this in a little bit in a few slides, but there's a bunch of different investment tactics, right? Whether it's stocks and bonds and 401ks and whatnot. Real estate always beats out every other one, right? By professionals that have been doing that invest in every kind of instrument, right? The wealthy talk about having 7 streams of income, right? And real estate continues to lead the rest when it comes to the best investment. There is a substantial tax benefit to owning a home, right? So I'm not sure if we have a tax expert in the room, right? I know there's some tax law changes, but regardless, when you're buying your house, you are going to be getting a tax benefit. So even if your mortgage is going to be a little higher than what you're currently paying in rent, you're saying, man, wow, it's going to be more expensive in order for me to live. Yes, you know, maybe on a monthly basis, right? But again, you're talking about that monthly basis. You're not talking about the long-term equity that you're building, and you're also not taking into consideration the tax benefit that you're going to be receiving when you own a home, right? So sometimes, well, I think it's always cheaper to own, right? So avoid the rising rent trap. Any landlords in the house, right? Landlords, do you raise rent, right? How much you raise? How often do you raise rent?
Once a year.
Once a year. Why do you raise rent?
Because cost of living goes up.
Cost of living goes up. So here's the thing. Back in 2008, market crashed. We had some home value that depreciated. Did rents go down? Nope. Right? Rents always go up. Right? Even gonna go up. So owning a home is still one of the greatest investments the average American can make. What is even more certain is everyone needs a place to live. Investing in a home with a fixed interest rate provides stability one will not experience with a landlord. So when you enter into a mortgage, right, prior to 2008, there was a lot of predatory lending, and thankfully it's more heavily regulated because it protects you, the consumer, right? And there was all kinds of interest rates and arms and balloon payments and prepayment penalties. But the interest rate right now, especially for a first-time home buyer, you're going to enter into a fixed rate, right? So you know what you're going to pay, right, on a monthly basis. Now, in that mortgage payment, for those of you who may not know, it's not just the principal and interest. You're also paying insurance. You're also paying taxes. So if the taxes do go up or down, it is gonna change your mortgage payment because your mortgage payment includes all of that. But it's a fixed payment, right? Where rent, you don't know, right? Rents, if it's not in a rent control area, and maybe they raise your rent by $50 or so, but they can get $300 more. They'll either rent or they'll say, listen, you need to pay this much, or you need to get out. I'm going to find someone else. So you don't have the stability, right, when you're renting. Landlords write contracts with provisions and annual increases in them. So renting means one is subject to moving at the end of the lease term, and most landlords factor maintenance into the rental rates they charge, because if you own a home, you're in charge of that upkeep as well, right? So that's also included in that rent that you charge. Okay, so I don't have to read that. That's a picture of my family there. That's I photoshopped myself to make myself look slimmer. No, I didn't. It was just a couple years ago. But anyways, fulfilling the American dream. This is part of what we want. Right? We want to own our homes, and I think that the good thing is that the FHA programs, and we even have some conventional programs that are designed to really help people get into their home for the first time. Whereas when back in the olden days, even in our family, right, even our parents, they had to really save, right, for long periods of time and put a huge chunk of money down, right? Pre-Great Depression era, right, you had to come up with 50% sometimes of the value of the house, right, to go down, right, to purchase a house. Then it became 20%. Now with an FHA, right, you can buy a 3.5% down. You can buy a property, right? So the good news is that now it's easier for people to get into their homes. There's some cost to that, right? But the fact is that you only need 3.5%, or even 3% in some cases, right, for the conventional program to actually purchase your home. So home prices are expected to rise. We've been seeing that, right? Whether you're planning to relocating to a different area of the country or planning to stay in your current city or state, waiting to move may end up costing you more than you think. Keep in mind that the industry changes day to day, And home prices are projected to rise between 3 to 4% in 2018, which we're on track to see that, right? So what's the cost of waiting? So waiting to purchase a home until you're emotionally ready may not make the most sense in the long run. If you're ready now, right, just sometimes buying a house is not an easy transaction. It's probably going to be one of the biggest transactions at this point in your life, right? And that's why it can be very daunting. It can be very complicated. Who you work with really matters. But if you're ready now, right, why wait? And if you're not ready, you need to talk to professionals to know what it is that you need to do in order to be ready, so you can have a definitive timeline for yourself, right? Whether it's your credit, right? We talked about that. That's why we call this credit to closing. Whether it's the down payment funds that you're going to need, right? Whether it's the income. Maybe you don't have the income, and we'll talk a little bit about that in a few minutes. But you need to know where you're at. You don't know what you don't know. Right? And I think we love doing this because we love educating the public, because a lot of people think that they're not ready, and when we analyze their current situation, they are. Right? Now, our job is to help them get into the best scenario possible, and we'll guide them to do that. But you need to know where you're at.
You said analyze their current situation?
Yeah, so what I mean by that is we look at, so whenever I speak to anybody that wants to apply for a home loan, right, we look at three things. Right, we look at your income, right? What do you do? How long you've been doing it? I think Gizzy talked about 2 years in the industry that you're working in. So, what's your income? What is your credit? Not only score, but what are your liabilities? Right? How much do you owe on a recurring monthly basis? And then what are your funds? How are you buying this? How are you paying this house? Right, the days of buying a house with no money down, right, before 2008, right, those are very tough. There's sellers concessions and whatnot, and there's down payment assistance programs, but you have to have some capital, right? So a lot of times we look at a certain situation and we may say, wow, this person has great income, has great credit, but they don't have the funds, right? Or this person has a lot of funds, great income, but the credit is shot. So we look at each situation in order for you to know where you're at. So this process is not a transactional process. We work with clients for months and sometimes even years on end in order for us to get them into their house, right? And I say years because it's probably on them. But quite honestly, depending on where you're at, you could be more ready than you think, and you need to just know, right? So when I talk to people, I says, well, you know what? Let's pre-qualify you. I talk to them over the phone, and if they seem like they're or in person. I don't have to even look at any documents, but I can tell them right off the bat, okay, well, listen, it sounds like this is a good case. We got to see some documents to verify that, right? So did that answer your question?
Yeah, is the goal to get them in our house, or in is it a specific house? Like, the goal is just to give them a house.
Yeah, so, all right, so let me expand on that. So this is the process, right, of buying a home. Typically, you said, all right, you know what? I want to buy a house, right? Typically, you would call a realtor, right? And I think that the realtor is going to be the one to find the house for you. But before that realtor looks for houses with you, right, and your family and whatnot, they need to know what you're approved for. So if you're not pre-approved, they're going to call me and they're going to say, hey, Eric, can you pre-approve? What's your name? Padoro. So can you pre-approve Padoro? Great. So I'll call you and we have these conversations, and then once I verify, right, your income, your credit, then I'm going to pre-qualify you for a certain amount. So if you're pre-qualified for $300,000, now you go and you work with Anna and you say, okay, Anna, I have $300,000 to work with, right? I want to live in the Bloomfield area. A must is I need 3 bedrooms or whatever the case may be. So now we get that number, right? And that's a starting point, right? Because it fluctuates depending on taxes and whatnot. And I'll share that information with you. But now you have like a number where Anna can go, and she's going to use her systems, right, and her expertise to find you the house that you're looking for, right? She might tell you also that if you pre-qualify for a $300,000 home and you want to live in a certain area where it costs $600,000, she's going to tell you you're crazy, right? She should tell you you're crazy, right?
Sophy would tell me.
But because what a realtor is there is they look at the numbers and they say, okay, what do you want? And that's why they're going to go ahead and they're going to really get to know you as an individual, right? And they're going to go ahead and try to match that right home for you within that price range. right? And that's why they're gonna so it's not this is not a transactional thing. This is very personal. Like we get to see you, and we get to see your family, and they get to know your wants and your needs, right? And you might say, you know what, we're expecting, and we want to live in a community where the school system is great, right? So their job is to research those things for you and take that budget that a financial a lender comes up with, and then they start looking. So the first step really is to get pre-qualified and or pre-approved. They're slightly different, but the fact is that they're both going to tell you how much you can afford, right? And then we take that number, and a realtor typically is not going to show you a home, right, without that letter, because she needs to know that someone actually did their homework and knows that you can actually, she's gonna spend a lot of her time trying to find you your home. She wants to know that you're actually pre-qualified by an institution, right, or by a mortgage broker or mortgage lender, whatever the case may be. And then once you do that, then you start looking for your home with a realtor. Right?
You ever say you're crazy and you don't need a house, you're crazy, you need, they ever just turn you down
No. Crazy? Well, no. So I think if you're pre-qualified, right, that's a good. So the first thing is sometimes you're not pre-qualified. I work with people and I say, listen, right now this is not going to work. But we try to come up. Right, our job is to get people into their homes. We're going to go back a couple of slides. We talk about the American dream, right? This is a better investment. This is how you gain generational wealth, right? So our job is to get somebody into their home, because once they have equity in their home, it's going to be better for them in their futures, right? I have people that in 2 years refinancing and they're cashing out and they're purchasing investment properties now. Now they have multiple properties, or they cash out and they pay off student loan debts and they're saving $1,200 a month, right?
Can I give them an example?
Yeah.
So I had a client, and it's a single mother, doesn't qualify for much, and she actually qualified for 120, but she was realistic, 120, but she was realistic, and that's a single mother, which is, very dear to me to help somebody like that. And I didn't give up on her. I didn't tell her she was crazy. I said, that's what you have to work with. That's your income and that's how much you qualify. We try to make it work. Once we couldn't do anything about it, I actually had her matched her up with another lender to see if we could raise what she qualified for, and we did. We actually raised by switching her lender. This is why it's very important to work with a team of good people. So her lender was able to qualify her up to 150. So now it's a little bit more realistic that I'll find her something. And she wasn't trying to live in the greatest neighborhood. She's like, all right, Irvington, Newark, and we're under contract now. We finally, and it's been over 6 months. I didn't give up on her. I didn't tell you, you just have to be realistic, right? You can't have, I have clients with $120,000 budget and they want to live in the nicest neighborhood with, 2-car garage, whatever it is. I'm like, I'm sorry, even at 120, we can't find you anything. And if you're not willing to compromise on what you're looking for, then we're not real estate fairies. We can't make things appear out of thin air. We will work with you when we're all passionate about what we do and getting you in a home, and we partner up with the best in the industry just to provide you the best service. But at the end of the day, if you're realistic and we work within, within reason of what we can put you into a home, like I said, that person might not be in that house for 30 years or 10. Their situation might change. They might get a raise. They might find a husband, somebody, a second person that will bring income to the family. They might need to expand their family, and then in another year or two, they might be able to buy a different home. So you can't look at it as not being realistic. We all want to live in $1 million home at first, but it doesn't happen that way. As long as you're realistic, we're not going to turn you down. We'll work with you. We're not going to call you crazy. Now, if you tell us you want, a mansion at a $120,000 budget, we will sit you down and show you this is what's on the market within your budget. And if you're not willing to compromise, there's only so much that we can do.
Thank you, Anna. And it's not. Sometimes it's not what you. Sometimes it's not what you can afford. Sometimes it's what you want to afford, right? So you might be able to afford a $5,000 mortgage payment, but that's not in your plans. You don't want to do that, right? And that's perfectly fine too. Our job is to tell you what you can afford, because we're all regulated. We're all regulated the same, right? And the regulations are stricter since 2008, which is good to protect you as a consumer. But we work with you. We want to know what your wants and your needs are. And let's say, and so going back and says, well, if this person doesn't qualify, our job is to say, okay, well, how can we qualify them? Do they have a co-borrower that they can add in a mortgage, right? Do they have a family member or a son or something? And that happens all the time, right? But still, it's better to do that and get somebody into their home and avoid throwing money away in rent. And now you have your own property that you can call yours, right? People refinance all the time, because now they say, okay, well, we're going to go ahead and take out my son, who I used to buy a house 5 years ago, now that because my son is not ready to go buy a house on their own, or whatever the case may be. So we're really helping families, right? So we try to figure, and sometimes we say, listen, you're not ready now. This is what you need to do, right? And we stay in touch to make sure that you're working on those things. So when you're ready, you're ready, right? And we keep it real with you, right? We keep it real, but our job is to try to figure out how we can get you into your home, right? So the cost of waiting to purchase a home until you're emotionally ready may not make the most sense in the long run. This below an impact of the interest rate of an interest rate change would be on the mortgage payment. If today was $250,000, but then in a year it appreciates by 4%, right? So today you have a mortgage for $250,000. The mortgage is at 3.75, low fours, whatever the case may be. That's what your payment and interest payment is, $11.58, right? If next year that same house, right, goes up by 4%, Realtor said that in this area was going up by 5%, or whatnot, right? So now that means that next year you're at $260,000, right? Same house, right? The interest rates are going up, and I put 4.625 because in one of the reports that was one of the projections of where the interest rates are going to be by then. So now your P&I, your principal and interest payment, is $13.37 per month. So over the life of that loan, and most first-time home buyers, when they get into a loan, they do a 30-year term. Over 30 years, you are going to spend an additional $64,440 just by a 4% rise in price for the house, and by less than a point in rise of interest rates, right? So it adds up, right? It adds up. The power of equity. What will your home be worth in just 4 years? I believe I used here, I was using 4%. We could probably do the math from 268 to 276, but it's over the next 4 years. Yeah.
Just to go back a bit, you mentioned on the last slide points. Can you explain to us what a point is?
Got it. Okay. So great question. So I mentioned the point, and I was referring to interest rates, right? So the interest rate, let's say you got a mortgage on a 3.75% interest rate. That's the interest that you are paying over that mortgage over the life of the loan, right? A point is just basically 100 is 100 basis points of that. So like if you're at 3.75, a point more will be 4.75, right? So that's a point, right? When you're talking in terms of interest rate. It's a good question. A change of, I'll throw another number out. A change of 0.5% in interest rate, right? If you're at 4.25 and then you go to 4.75, over the life of the loan, we're not even talking about increase in prices in homes. Let's say the home stays valued the same, but just a 0.5 point interest rate difference is gonna cost you tens of thousands of dollars over the course of 30 years. Just in that slight change in interest rate. So interest rates are based on what interest rate you get is based on your credit worthiness. So when the banks are lending money, they're looking at everybody's current situation, right? And they want to make sure that you're not going to default on that mortgage, right? So they look at your credit history and your specific financial situation to say, okay, well, how likely is Eric in walking away from his home? So here's the thing: for the FHA program, because you can only you're allowed to only put down 3.5%. Just think of it: you're putting 3.5% down. So the bank has to say, okay, I have to ensure that this person's not going to walk away. So the interest rates for an FHA program are actually, one of the best out there. You're gonna have to pay homeowners insurance, a steeper homeowners insurance on a monthly basis. You're gonna have to pay an upfront mortgage insurance. So the money that the bank lends you is based on your credit risk. So interest rates is based on credit, right? On your specific credit. Like, where are you, right? And also the loan program. Also, how much are you putting down on a property? Because it all ties up to your credit risk, right? So that's what we look at credit rates and interest rates, and one bank is going to give you a rate, and another bank, right? Even if they're going to try to beat it or whatever, but it shouldn't be too far apart because we're all regulated the same, right? But it's always good, right, to say, hey, you have a right as a consumer to say, you know what, I want a second opinion, right? I want to go and if you guys are pre-approved, I want to go check. I'm going to go with Eric to see if they can beat the rates in terms somehow, right? But we're still going to analyze the same numbers. Numbers.
Will it drop because that's a second hard pull?
Great question. Yes. Right. So when you do a hard inquiry, it's going to appear on there, and your point is going to your credit score is going to get affected slightly. Right? It's not going to. So here's the thing: we analyze that, and if we think 2 or 3 or 4 or 5 points is going to affect you, right? We got to be careful with that. But we do have to pull it, because going back to the question when Gizzy was speaking, different companies have different parameters, right? Whether you go to a car, if you're going to go get your credit pulled by a car dealership, or by a mortgage company, right? Or by Credit Karma, right? So we have different parameters, and typically hard inquiries are a little bit stricter than a Credit Karma would be. So when somebody tells me their scores,
Credit Karma doesn't lower your credit scores.
They don't lower your credit score, but what I've seen is it's a personal pull, right? It's a soft inquiry. But what I'm saying is that if you're at 680 in Credit Karma, chances are if I pull your credit, it might drop. It might not be at 680. It's going to be a little lower than that, right?
Credit Karma could be off anywhere from 80 to 100 points. So that's why I don't recommend it. They don't want you to confuse you.
Yeah. Yeah.
But my Credit Karma told me I can qualify for a mortgage, and the next thing you know.
Listen, it's a starting point, right? I think it's a starting point, but you, like, if you're going to buy a house, if you're ready to buy a house, work with a lender and see where you're at, right? So we can wrestle and see what we can do.
Excuse me, Gizzy, if not Credit Karma, which ratings agency should we use?
Yeah, we usually recommend Experian.com, Equifax.com. They're more conservative in their credit scoring model. Credit Check Total, CreditCheckTotal.com is owned by Experian, but basically they have more of a conservative credit scoring and more of a realistic. They could be off too, anywhere from 15 to 20 points. But Credit Karma is really going to be off. Mm-hmm. And, we just don't recommend that people go there just so that they could see that, oh, I'm going to qualify for, $500 credit card, and they're a business owner. That's not recommended for them to have a $500 credit card. If you want to restart the building of the process of that, maybe.
I pay $10 a month for ScoreSense.
Oh, ScoreSense, yeah.
Right, I pay $10 a month. It's not free, but like I just know where I'm at. And if there's something that comes up on my credit report, like they'll let me know, hey, you got to research this.
Correct.
I pay $10 a month.
As long as you have an understanding of where you are at, and maybe you're going to be off 20, 30 points. More importantly for you to understand is how you are responsible for your credit report. You got to build a relationship with your credit report. You got to know what you're doing, if it's hanging high, if it's hanging low. Sorry.
Yeah. You don't know what you don't know, right? So you got to know.
Correct. But you got to have an idea. So I'm not making you think about it.
Okay. So cool. So going back to what do you need to qualify? We talked about looking at income, credit, and down payment, right? So the down payment, we talked about the 2 different programs. Some people say, "Hey, Eric, are there down payment assistance programs?" And yes, they are. They're government funded. The most popular ones are Smart Start and Homeward Bound, I believe it's called. Only certain banks are approved. We're actually in the process of getting approved to be a lender for these programs. But I have a counterpart in one of the banks that is, and every time I can help someone, and if all that person needs is the money, right, and everything else is great, my job is to get that person into the home, right, and I'm going to refer them to someone that's in that program until we get that program too, right. But the thing with these, they change. They're government funded. Once the funds are done, sometimes that program is done. But Smart Start and Homeward Bound are, I think Home Seekers just finished as well. But these are something like if you go to NewJerseyState.gov or something, that they'll explain these down payment assistance programs. But they have to be in certain areas, and not just everywhere. They have to be in certain areas that are coded to be in a Smart Start or in a Homeward Bound Seeker program. Income verification. We look at pay stubs, we look at taxes, W-2s, 1099s. Already been within your reach. All you have to do is qualify. But the big question is, how much do I actually need to qualify? Going back to credit. In an FHA program with 3.5% down, you actually can buy a home with a 580 credit score. 580, right? When I work with individuals that are in the 580, I'll say, listen, let's get you to a 620, right? Because 580, again, going back to credit risk, you're going to pay more for it. And my job is to help individuals get into their family and be able to afford it long term. So if we can help the person get to a 620, I'm always going to I'm always going to say, listen, let's get you to a 620. Let's work on your credit, right? Work with Gizzy, right, to get you to 620 because that's an investment, right? Remember that interest rate change that we talked about? If you can qualify for a better interest rate, you're going to save tens of thousands over the course of the life of the loan. So, but some people might say, they might win the lottery and say, I don't care, right? I want to buy a house now. And that's perfectly fine. Buy a house, but their interest rates are going to be a little bit higher. But you can buy at a 580. You can actually buy lower than 580, right, in FHA, but you're going to have to put 10% down, right, to do that. But the whole purpose of FHA is that you want to put 3.5% down in the program, right? That's just my dog, Honey, because I was doing this presentation and my daughter told me to put it on there. So there goes Honey. All right, she goes, Dad, I dare you to put Honey. I said, you dare me? You got it. All right, so Chacho's coming. So saving for a down payment. If you want to be a homeowner, you need to save. If you save $300 per month in 2 years, that's $7,200. That's a down payment of 3.5% of a $205,000 home. But let me go back. My last transaction last year, he closed 3 days before Christmas. Gentleman had $10,000 to his name, right? Including what was in his 401k, whatever. He's working for 18 years for a company, whatever. He had $10,000 to his name, right? And to buy a house of about $300,000, 3.5% is $10,500. But that's not all you need. You also need closing costs. You also need to come with reserves for escrow and whatnot. So you're gonna need about 20 grand, right, to buy a $300,000 home if the taxes are in the $10,000 range or whatnot, right? At one point we could have been like, nah, you know what, you don't have enough money to buy, right? But we said, no, let's go out there, and the only way you'll be able to buy a house is if you get a concession for the remaining amount, right? Because you can get a seller's concession. Do you guys, any realtors want to talk about what a seller's concession is? I'm calling you out. Anna spoke, you did very well. I'm going to call on Sophie. Sophie, stop. Sophie, Nicola, seller's concession. Seller's concession, yeah.
So I'll talk about seller's concession really quickly. So I'll give you an example. Let's just say the house is $100,000. The seller's concession is a credit that the seller will give back to the buyer to help him with closing costs, him or her. What that means is that you're offering $100,000 on the house with, let's just say, $10,000 in seller concession, which is not realistic, but just figuratively speaking, what you're really offering the seller is $90,000 for their home because they're going to credit you back $10,000. Now, it's still possible to submit a full price offer of $100,000 and request that $10,000, that same $10,000, you just have to submit an offer for $110,000. So the seller will still get the proceeds of the $100,000 sale of the home, and then you would receive a $10,000 credit to help pay for the closing costs on the mortgage.
Now, so now you would have to qualify for that amount, and that home would have to appraise for that amount.
Yes, that's
right?
The other piece. Yep.
So
if the home doesn't appraise with that addition, you got to be careful, and that's when you want to consult with your mortgage rep or your real estate professional to make sure that we're not going into a deal that's not going to appraise, and then you're not going to be able to purchase the home for that amount.
And the loan amount is going to be a little longer, a little more, right? But that's why we work with you in the real estate professional, and we say, listen, this person loves this house, and this is what needs to happen, and we try to help the person get into their home. You know, and obviously within the client is ultimately the one that says, okay, I want to do that, right? But if that's the case, if the money is the case, a seller concession will help you. And I can tell you right now, 70% of the transactions that I'm currently doing have seller concessions in them in one way or another. One as little as $2,000, one as much as $15,000.
What is the max interest or percentage for a seller's concession?
6% seller's concession for an FHA. For conventional, I believe is 3% maximum. Right? Am I correct?
Yes.
All right, cool. Thank you for checking me. All right. But that could be a considerable amount, right? What's 6% of 300,000? Do the math. 18 grand. So you can basically get $18,000 right on a transaction. Now they cannot exceed your concession cannot exceed the closing costs, right? But still, it's a big help, right? So saving money. Real estate is still America's number one long-term investment. We talked about that, right? So the Gallup organization did a survey and still feel that real estate is the best investment tool there is as compared to stocks and mutual funds, gold, savings, CDs, and bonds. Right? So the mortgage process, what can you expect? You get pre-qualified, like we talked about. You work with a realtor to find a home, right? Then once you find the home, the contract is accepted. Once we get a fully executed contract, that's when the loan application process begins, right? Then it goes into processing, underwriting. They review all the documents, make sure everything's on par. They run fraud reports and the credit reports and all that, right? So then you get what's called a conditional approval, right? So you're issued a conditional approval pending the appraisal, right, of the home. So you should be getting a conditional approval before an appraisal. So that way we can start clearing any things that the underwriters may want in order for us to fund this loan. Then once we get the appraisal, we look at the value, we look at any conditions within an appraisal, so we can go ahead and close. Then it's going to go to final underwriting and approval. Then you're going to get the CDs, which are the closing documents, and Chandler was talking about that earlier. They're going to call. You're going to say, hey, listen, this is what you have to pay. You're going to be getting an email or face-to-face, whatever your preference is, and then you close. So how long is this process? How long should it take? I think a good thorough process is going to be within a 30-day time frame. You can close before then. I've seen loans close in 21 days, right? But they can also take as long as 60 days, 90 days, never close, right? So that's the worst case scenario. But in 30 days, if you're working with someone and everything is up to par and you guys and they have all your documentation, we should be within 30 days. That's a good time frame for things to happen, because you got to realize it's not just the mortgage loan originator. We're also working with the attorneys. We're working with title companies. And if it's 2 or 3K loans, I'm working on doing 2 or 3Ks at the moment. Those typically take a little longer. And for those of you who don't know 2 or 3Ks, those are rehab loans. You can actually borrow money to fix your first time house as well, right? So there goes Chacho. That's my other dog, right? So picture yourself in your new home. And I want to thank you guys.
Wait a minute. Why is it that you run your credit again? Like, isn't the credit report good for 60 days?
No, we don't run it again. No, we don't run the credit again. If we run credit again, if I think we can get a better rate for the individual. Let's say, for example, somebody gets into the home loan at 580. So listen, you want to get into it, let's go into 580. This is where your interest rate is going to be. But before closing, right, if the 30-day time frame happens, and let's say like right now I'm working with a client where they're giving me proof that they paid down some debt, and then I'm going to use that to do what's called a rapid rescore and run credit again, so that way it can improve by a certain amount. So you don't do that all the time, because you're right. Right? Credit actually for an FHA loan, your credit report is good for up to 120 days. And then for most other type of loans, about 90 days that they're good for.
Why do some banks run it at the end?
Yeah, go ahead.
There's other mortgage companies that they make it part of their process to run credit right before closing, to see that there's no changes in your credit, you didn't go out and get a car, getting excited.
Kev, do we do that all the time? Do we run credit all the time?
We do, but that second pull is more of a soft pull. They're not really looking at score so much, but they're like
okay.
They do run the credit.
Yeah, so you're right.
Well, what happens
So soft pull.
What happens if a customer gets a collection, $2,000 collection?
They're gonna have to take care of it.
You're gonna have to address it right before.
Here's the thing, and if you're working with a lender, they'll say, listen, do not like pay your bills in time. Don't go out and get a brand new car, right? Like when you're doing this. So we tell people don't affect your credit, right? Because those things can kill deals, right?
Don't put a down payment on furniture.
Exactly. So
you're gonna have to address all of it before closing.
Yeah.
It's happened to me that I had a lawsuit that I wasn't aware of, and that came up during title search.
Yeah.
And my attorney said, "Well, you want to close on this house? You're gonna have to pay." I'm like,
Yeah.
well, "I know nothing about it." He's like, "Well, do you want the house?" So I had to write like a $10,000 check.
Yeah.
At the last minute, right before closing, because
Yeah.
I had no other choice. Like either now or 10 years from now, you're gonna have to pay it.
I have a case right now where it's a 203K and the person's in a payment plan for their taxes, and we use that as part of that debt to income ratio, but they missed a payment in February. So now they have to pay off the 2016 taxes, right? So that's an additional expense that they didn't think that they had to do, right? But that's why we gotta say pay everything on time, right? Don't get any new credit. Just let's close on your house, right? Pay taxes, right? So we should have that conversation in the beginning. It should be common sense, but we still need to have that conversation, right? So make sure that we close on your house.
My question has to do with, you mentioned that a survey said something along the lines of real estate is it's still better in terms of investing than stocks and bonds, etc. That being said, I find that we still have a lot of first-time home buyers that's interested in single family. Would you recommend that they at least explore multi-unit?
Great question. Whenever somebody's buying a house for the first time, I always talk about the possibility of multi-unit. One, you'll be able to qualify for more. So if you qualify for a $300,000 single family home, chances are you're going to qualify for $400,000 plus, right, for a multifamily home, depending on the rent roll that you'll be getting in the area that you're purchasing in. Because we use 75% of that rental income, because we have to account for vacancies, to add on top of your gross monthly income. But I always, listen, our job is to help families get into their home, but we also want their well-being. And we say, listen, if you can get into a two-family home, one is going to help you with the mortgage payments a little bit more because you'll be able to rent, right, one of them, right? And then going back to rents, you're the landlord, so you can raise those rents, right, as market rents go up as well. And then you can actually, if you buy a house for 3.5% down, multifamily, FHA, right, and in a few years you say, I'm tired of multifamily life, I want to move, to Scotch Plains and get a single family, you can actually use the 3.5%, right? You can actually, as long as you don't have an FHA, you can refinance out of the FHA. You have a conventional mortgage, right? You can actually go and use a 3.5% down in a single family property as well, because it's considered an upgrade, right? Your family is expanding, or you're moving to a town in a better neighborhood, or whatever the case may be, or for your schools to go to school. So you can actually use that minimum down payment down program again, right? To buy your single family. That's a great benefit of buying a multifamily and then a single family, because now, talking about investments, you have two equity yielding investments, right? Right? And I say equity investments because prices are going to go up, and then the mortgage balance goes down, right? And then if you use these programs and you have an FHA program for your multifamily residents, when you have enough equity, you can refinance out of it, right? You can cancel mortgage insurance in there. You're actually going to be making more money, right, when you move out of that place, because now you're going to rent your apartment too. And now you have an income producing property. Even if it's not income producing, even if it covers it, it's still another property where you're gaining equity in both ways, right? And then you move into your own single family. So I always tell people the options, right? And a lot of people say, you know what, that makes a lot of sense because our job is to educate them. But some people say, I don't care. I'm tired of the hood. I want to go out and I want to live in a single family and with a fence so I can have my dogs go out and play or whatever the case may be, right? So that might be realistic, right? But our job is to educate them about the possibilities, right? Because if I know that I can, in 5 years, I can move out of my multi-unit and have another house where I can buy, even with the equity of the unit that I have now, I can even use that to purchase, right? So it's another good investment tool. So it's a good conversation to have, right? Cool. Any other questions?
Cha-cha, that's the name of the talk?
Chacho, yeah. My wife and I we have a children's book series according to Chacho. So, well, I say series. We only have one book. We're publishing the next one. But yeah, that's our dog. According to Chacho is his name. Yeah, cool. Any other questions? Yes, no, maybe. Right. Boss Associates, you guys want to have any final remarks?
Final remarks. Come on, Boss Associates.
What do you guys think about the seminar?
So, here, I'll fill in the blank. So, first and foremost, if you haven't noticed, we haven't spoken very much, if any, because this was truly an informational-based seminar. It was all about giving you as much information as possible, and then obviously we can always mitigate the process. This is the team that we work with. This is who we prefer to work with. It's not the only people that we do work with, but we have a good synergy together. And when you're choosing your real estate agent, it's the exact same thing. Can you relate to that individual? Do they do all these things behind the scenes and it's kind of like you just kicked your feet up and made the process that much easier? That's what you're going to look for. But first and foremost, if you don't vibe with that person, if that person doesn't have the same energy that you do, that's okay. That's fine. There's 65,000 licensed real estate agents in New Jersey.
65 of them work here. Scotch Plains.
Most recently, we were officially the largest real estate brokerage in Scotch Plains, New Jersey. So we're really excited about that.
All right.
And we got to introduce one of them, who's number one, not only allowed us to be here this evening and use his second home, but has given us all the courage and confidence and believed in us, which is Mr. Louis Lavo, the CEO.
All right.
Good job. Very proud of you guys. I hope you enjoyed all the information. It was very valuable. I know I learned some stuff. And it's always good to refresh it, even if you know the stuff. So thank you again. I'm very proud of you guys. I can't say that enough. Nicola, come up here.
Come on, Nicola.
Yeah, why are you hiding in the back?
I don't know. You met her in the front, She was greeting you guys. She knows all of you guys.
She was our greeter.
Come on.
Did everybody sign in?
Yes.
Sweet.
Yeah.
There's a reason why I asked that.
So I don't know if there's anything else you guys want to add to it, but I want to make sure everyone enjoys the rest of this beautiful day.
Yes.
Thank you for being here.
We wanted to make it short, and also we have meetings on Monday.
You guys are invited to come join us on a Monday morning. We have trainings for not only agents, but training for anyone who wants to learn more about real estate or people who just want to learn ways of bettering themselves, because we cover it all. So it's open to invite to everyone. 9 to 12 o'clock every Monday morning.
Here?
Yes, it's here. It's
Yep.
9 to.
Here, down here. And before we do that, I will send out everybody like with an email upstairs. All right, perfect. So what I'll do is we'll send out an email just for some feedback. There's only 4 questions on there. The first question is your overall experience, rate it 1 to 5. The second one is what was the most exciting, or what did you learn the most about, which is an open-ended question. The second one is there anything that we did not include that you would prefer to have had been included or omitted from the presentation? And the last one is, how did you like the food provided by Yoli's? That's all we want to know about. So if you guys would be kind enough to just fill that out for us. This is not only for us to be aware of, but as well for when we do future events, we know exactly what everyone is looking for, and you guys are more than invited to Monday or any other seminar that we do. Thank you. And then, wait, we're giving away my pot?
Yeah. Sorry. Alrighty, so we would like to give this to you. You were the first one here. Yes, you did. So
He drink coffee. He don't drink no coffee.
It's okay. You can give it to him. Give it to somebody. You want to give it away to anybody else here?
Maybe his mom drinks coffee. Who knows?
Somebody drinks coffee.
I'm gonna take it if you don't. I'll make my coffee strong.
Thank you guys for coming.
Thank you very much.
Who drinks coffee?
GizzyCredit here?
Thank you, my people. GizzyCredit here. I'm gonna have everyone.
If you guys have any one-off questions, we'll still be here. So
I'm gonna have everyone's information below. It was Sophie, Anna, Eric, Hugo, New Jersey here, but definitely Chandler too, real estate attorney. So thank you so much for letting me be here. I appreciate you very much. And we got a lot of comments in there as well. So this is going to be for everyone out there looking to learn about the real estate buying process from credit to closing. GizzyCredit, you already know.
And Boss Associates.
Thanks.
What? I gotta do the
Sure, you don't want it? All right.
Oh, now we go. Now we go whack. Are you sure you want to stop streaming?